Good
Okay.
morning, everybody. Welcome back to the Opportunistic Trader. It is the AM Roadmap. It is January 24th. This is Mike Aronovitz, and I'm joined by Vince Lancy. How's it going, Vince?
Good morning. Good. Good morning. Thank you, Mike. Hi, everyone.
So it looks like we just had jobless claims come out, and they came in at a whopping 199,000, which is the lowest jobless claims since 1969, is the stat that just came out. So, I think a lot of that, there is some noise in that data based on the government shutdown, but still a very strong number. That said, it is just a weekly jobless claims number, and there has been zero market reaction. The bond's up 22 on the day, the 10 year's up 9. The 10-year yield right now is 272. The 30-year is just over 3%, 303, and the 2-year is I don't have it up, but I think it's about 258. But based on that data, not a whole lot of movement. Vince already went over gold's down $7 on the day right now. Crude down 23 cents. S&P rallied into the close yesterday. S&P right now is up 5 at we just dropped, and ECB comments, I think, are maybe what's behind that drop here. So S&P is now flat. Euro just dropped. ECB's having their
If I
press conference right now, so maybe we just
if
dropped
I
on.
could just quickly comment on the jobless number, so you can pivot to the ECB. Yeah. Hello.
Yeah, you're here.
Oh, okay. Good. Good. All right. So I thought we lost each other there for a second. Before we delve into the ECB, which I think might be actually interesting today, whenever you have a jobless number that's that jobless claims number that's that low, anyone who's digging into data will look at that number and look at the types of jobs created. Are manufacturing? Are people? Is the jobless claims number low because people are dropping out of the workforce? And that's your normal work you would do when you dig into data of a jobless number. But on top of it, as Mike pointed out, we have uh, a government shutdown.
I just
Does
want to
that make
jump
the
in. Sorry
jobless
to
number go
interrupt.
down or up?
We
I have
actually
no idea.
dropped. We actually dropped because Wilbur Ross is on CNBC, and he said that we are miles away from a China deal. That's the quote. So that's the reason why we dropped, not the
There you go.
ECB.
Okay, good.
Miles and
That's good.
miles.
So that's it on the jobless claims. So jobless claims is not going to be, that's out of the market now. So now we're focusing on oh, there it is, Wilbur Ross. Yeah, miles and miles away. So they're managing expectations again. There you have it.
Yeah, well, it goes to
That's
show you the back and forth, because Kudlow was coming on saying one thing, Wilbur Ross is saying another. I tend to think I don't know about miles and miles, but I think that we are far away from any sort of constructive deal. I just think that there are too many
right, right.
massive points that we're far away from. But we have seen volatility in the equity markets based on headlines, based on these sort of things. So I wouldn't be surprised if we get more of a follow through on the downside in the short term based on these Wilbur Ross comments.
I think
Similarly,
it's safe to say that the administration's commentary has become extremely bipolar now. It used to be all optimistic with a buried headline of not going
well,
strong.
I don't know
Now they're
about
actually giving
all
front.
optimistic. It's always been mixed. It's always been, there's two sides inside even this White House that are far apart. And I think Wilbur Ross falls on that side. He's always been more kind of hawkish on trade talk with China, things like that. And so he's saying, he's probably in the camp of, we're not going to settle for a deal.
That's
We want to make sure it's a strong, deal.
that's a good point. Maybe my own confirmation bias is showing. Yeah, Wilbur Ross has been the more conservative voice but he hasn't been given the microphone too much. I'm gonna agree with you that maybe I'm just focusing too much on the Trumps and the Mnuchins and the Kudlows, talking the market up or talking the trade deal up, and just putting my own blinders on and ignoring people like Ross. But you know what? Uh, uh, let's face it. I mean, after the last Kudlow comment, the market kind of faded on it, even though it went higher the next day. But Ross being given a voice and Trump not jumping up and down like a lunatic.
He
And
might
I
be
say,
later, but
well,
so
right, right. I
right
say that.
now,
I say that.
before we went on air, you were telling me a stat about euro on ECB days. Right now, the euro is down about 30 pips. We're down 40 pips right now. We were actually just down 60. We just bounced back some. But what was the stat you were saying about
Yeah.
ECB days and euro recently?
Feel free to look at this on your own. And I think this is important for our FX traders out there. I know we've got guys like John Hassinger, people who trade the Aussie dollar, people who trade the Japanese yen. Keep an eye on, here's a stat for you. Every time since inception, and feel free to check on this to see, feel free to check my work, but every time since inception, the euro has weakened during an ECB meeting, with there being one exception, I think November of 2018. Now, the reason I thought that was important is because with a little bit of, eye work, I looked at the euro getting weak going into the ECB meeting today. And I said to myself and to listeners on the Gold Fix, I said, yeah, the euro is probably fairly priced. People are probably just kind of front running the past behavior. It's a time series algorithm sort of thing. But lo and behold, in anticipation of dovish euro behavior, the euro sells off. I thought that would be it for it, but it's continued lower. So I'm surprised. In fact, the dollar is legging higher now. So, and like you said, the dollar is
$2 creeping up to the high of the year right here. You also made another point before, the differentiation. The pound is actually above 130. It's down 50 pips on the day, but we're at 130.22. And so the pound is actually up a few big figures on the year. So euro versus the pound has had a pretty big move. But the pound
euro versus the pound is definitely interesting to look at. Although I don't look at it enough. I just kind of look at the pound versus the dollar, because the euro versus the pound just drove me crazy. I was just Brexiting in my head constantly. But
I just put up that chart for everybody to see.
That's great. To keep it simple, those of you who want to understand Brexit, the ongoing day soap opera, without being inundated with all this information, there are three things that can happen between now and March 29th. One, there's a hard Brexit, meaning there's a no deal Brexit. Two, there is a deal, but the deal that was on the table was rejected, so they have to cobble together a new one. Or three, the bucket, well, actually, three is a second referendum. It is increasingly looking like they will kick the bucket on March 29th of a hard Brexit down the road. And that might be the good thing to do. But every time, I think as the chances of a delay in the hard Brexit increase, the British pound will manifest that higher. And if you're looking for a second derivative, why that is, if we delay the hard Brexit date of March 29th, that gives more time for the Remain crew to get a second referendum in and possibly reverse the whole process. Editorial comment, and then I'll just stop right there. If Britain remains in the EU, they're going to have to lower the pound anyway to converge with the euro, if not give up their own currency. If Britain leaves the EU, this is my opinion, the pound has to weaken to be competitive, although not as quickly as they would probably have to deal with. So that's basically it. The pound will probably go up as we approach the March 29th deadline, and then they consider kicking it down the road a little bit.
One comment I wanted to make here, ECB comments are coming out, and they're really not that optimistic. One comment that that they were saying is that Draghi is saying that the economic outlook has worsened or has moved to the downside, and he's citing protectionism and global trade. So that's not the most optimistic thing. Right now, S&P is up 1, Nasdaq's up 22. Euro is about 15 pips lower than where it was when Draghi started speaking. So really not a large move. But
it is the low of the day, though, right? I think.
No, we bounced about 25 pips off the low. We traded down to 113.06. We're right now 113.25. But yeah, I mean, euro, it looks like is trading heavy and probably is, looks like it's going to continue to trade heavy. But, there's a lot of comments, question and answer come up, things like that. But they, comments like those comments that are not very optimistic make you think that how can they start to be more hawkish? If anything, at this time, they need to keep the spigots open on the European side. And then did you see the German 2-year is at minus 58 basis points, whereas the U.S. 2-year is at 257, let's call it. I mean, the spread between those two is just enormous. And it's not
I
breaking
know.
news. It hasn't been. It's not like that just moved in the past few days. It's been there for months. So
It is. It is. I think it flies in the face of conventional wisdom that the stronger your currency is, the lower your interest rate should be on your bonds. However, when you look at the dollar as being stronger than the euro or strengthening against the euro, you would think, or German bonds, you would think. It's kind of a mess, but
well,
and I'm not
when you
going to
just
pretend to
look at it on a
understand it.
pure perspective of who's, cash in a bank, you can put money in a U.S. bank and roughly get 2.5%, whereas you put money in a European bank, you're paying to put money there. It just it's surprising that the dollar. That's why I kind of think the dollar will continue to grind up, regardless of what happens in a lot of different more macro themes. We're still the highest yielding currency right now in G10, and that's a big change
I know.
from 10 years ago. When you just take a look at a lot of different things going on in the world, you kind of want safety, and that's why people are still, flocking to our fixed income.
Right, right.
Yeah.
That's actually a good point. That just is why we are a flight to safety or a risk-off currency.
Right.
We are
Remember at
the
one point
highest yielding
last year, mid
currency in the
last
G10.
year, that was the big theme that everybody was talking about, just piling into U.S. assets of any kind. And, in Q4, we saw an unwind of that. But that's the thought process, I believe, behind it. Part of it is
Right,
A, the safe haven, B, the yield that we're getting. You can get some good risk-free yield there.
right.
Um,
If I could put a pin in the ECB, or just
yeah, absolutely.
put a final note on that, Draghi, and just the people that are active traders may not trade on this information, but it's becoming increasingly important to be able to read between the lines of the rhetoric that comes out of world leaders. For example, Draghi is basically saying the economic and monetary analysis is confirming that we are in a slowdown. The risk is that we slow further, but things are looking good. So basically, a half and half thing. I think the actual wording was ample degree of monetary accommodation is still necessary for continued sustained convergence of inflation, blah, blah, blah. Risk is to the downside. But what that means for me in 3 words as an active trader, rates are going to be lower for longer, which means we will remain accommodative until
Yep.
we think we're out of the woods. And that's what that means to me, lower for longer, because, what can they do, except be NERP at this point? It's pot odds for these guys, which brings us, I think, to the US. We do have bullets that we can use once Powell finishes his QT thing. What's on your radar?
I was going to say, let's shift gears to oil. I know you had some views on oil and the Venezuela news from yesterday. What are your thoughts there, and based on the price action and the long-term implications?
Sure. I'm going to call what happened yesterday a coup. Right? You could put the word coup in quotes, but it was a passive coup, a coup. But in the nutshell, I want to first briefly touch on 2002. In 2002, between April 9th and April 13th, Hugo Chavez was briefly the victim, for lack of a better word, of a coup. And in countries, in dictatorships, where you have a natural resource like oil, a coup in Venezuela in 2002 was bearish for oil, as it would have taken a large producer of OPEC out of the mix and possibly put them under the thumb of a Western supported president. That coup lasted 4 days. Oil dropped and then rallied in an orderly fashion thereafter. You can look that up. But yes, now to bring it forward, to show the similarities and differences and why this is important, especially for active traders in oil, is this. Yes, yesterday we had APIs come out and they were bearish. I'm not arguing that. So factor that out. A coup in Venezuela is bearish for oil if it is successful, because that would, without being too cynical, that would give us leeway to exert more influence on their oil production, violating OPEC. Point one. Point two, the difference between 2002 and today is, today we've quickly gotten 4 or 5 other Latin American countries to acknowledge the interim president, Juan Guaido. I'm probably not saying his name right, as the president, which creates a problem. Uh, uh, Even though the president Maduro controls the oil, which means he controls the military because you pay off your military leaders with oil profits. Uh, you now have enough countries on the side of the US, for right or wrong reasons, supporting this interim non elected president as president. And what that does is that sets the table for sanctions. And if you're an oil trader, pay close attention to that for two reasons. One, sanctions is bullish for oil in general. Secondly, because so much of Venezuelan oil is used for refineries in the US, it's probably going to change your crack spread. So I don't know how you're going to trade this, but with as more countries jump on board, the longer this coup, not coup, the longer it's a tale of two presidents, so to speak, the longer, the higher odds of sanctions and the higher odds of higher oil as a result of this, and crack spreads probably blowing out in the US. I hope that helps.
Yeah, absolutely. And look, there's been a lot of volatility in oil over the past few months. We saw oil trade up to about the 54 level, which Tracy was talking about, on a technical resistance level was pretty interesting levels. And we have traded lower. That said, we've shown some resilience just as the global equities have, twice now, both the past 2 days. Today is Thursday, Tuesday and Wednesday, U.S. equity markets traded lower into the 26, 15-ish area. Yesterday it was a little lower than that, I think 2608 or something. But
Right.
now, each day we've shown resilience and bounce back. We're right now trading 2638. And oil as well, we traded lower yesterday at one point and have now, bounced back. We're down 40 cents, but
I if I could add, I really think this is important for subscribers. If you are an interdisciplinary active trader, fancy basically word for you use technical and events and fundamental analysis in your active trading. I mean, who doesn't? You can't just ignore headlines. You should really, really look at the technical levels that Tracy gave yesterday and combine them, if you will, with the information that I'm giving you about past coups and my handicapping of how a future coup could turn out, and say, hey, I agree with Vince. I could be bullish. And then look at Tracy's numbers and say, hey, we're close to an active level to maybe get long. If you think that there will be, if you think that the active president, Maduro, will be out and the interim president will become completely accepted, then, hey, maybe you're bearish. Look at Tracy's numbers. Those are good. Combined disciplines to trade gives you at least a comfy feeling when you're losing money. I would.
is there such a thing as a comfy feeling when you're losing money? I don't know about that quote.
Sure. It's the old phrase. Misery loves company. The more colorful version I actually heard when I was a stockbroker from a rabbi actually who sat next to me, who was a broker. He said, "Vince, I'm sorry, but this is really how he sounded. We're New Yorkers, both of us." He goes, "Vince, a hunchback is most happy when it sees another hunchback." I'm like, "What the hell does that mean, Rabbi?" He goes, "Look, I'm long Nestle. It's down. You're long Nestle. It's also down. I feel okay." So my point being,
I
at
know
least you feel good
that.
about
Yes,
your position.
I can definitely more relate to that. You feel a little better when somebody else is getting pounded next to you. You're not in it alone.
Exactly,
I did want
exactly.
to bring
But
up
I do
this.
have levels in oil that
Well, hang
are
on one second.
technical, and
Okay,
I
yeah,
want to
go
share.
for it. Yep.
Yeah, just two numbers, right? Basis spot, okay, which I use for my analysis, not for my trading. 5247 and 5192 on an hourly basis are levels, and we're coming in, I think, close to that 5192 level when you adjust for futures. 52, I think that would translate in futures, even though we're bouncing right now, to about 5217 basis front month futures. Below 5217, I get a sell signal. So that's a volatility non-technical number. You should line that up with, say, Tracy's number and see what she has below as a level. If we break X, we go to Y. For me, if we go below 5217 basis, the spot month, which is should be March, then I'm for to get short for a couple hours. There's something to trade out there. On oil, I think might be it.
Yeah. I also wanted to point out, I brought up the straddle. Right now, we're trading, equities are taking a little bit of a leg lower. We're trading near the close of the day here at 26.33. So I was looking at the straddles here, and I brought it up. You can see the calls for the 26.35 straddle for tomorrow. This is expiration tomorrow. So you have all of today's trading, all of tomorrow's trading. The calls are
Right.
trading 12 and a quarter, 12.75. The puts are trading 13 and a half at 14. So it's roughly $25, which seems a little bit low. I know that the past few days we've had wider ranges and have come back to about the flat level. So each day the kind of straddle has been a bit more on the sell side. That said, you've had to sweat it out as it gets lower. But I would say for 2 days, 25 is a bit low considering each day we've been about 20 points lower than where we currently are. But that's looking at the straddle right now, and then you can also take a look. A strategy Larry likes to look at for his own trading often is doing different put spreads. So maybe like a 1x2 of, you can see here the 26.10 puts are, or let's say even 26.15 puts are $6 at, or 6 and a quarter at 6.75. Whereas maybe the 2600 puts are 3.75 at 4. So what he might look to do there on the 26.15 is buying. Well, there are a few different ways. He potentially could be selling the 26.15 put, one of them. And I'm sorry, actually, so it would be one option is you could either look at selling these or buying these 6 and a quarter, and then a way of financing it is, if you were to sell them at 6 and a quarter, you could buy the 2600 puts behind it, and so a way of limiting your risk.
Right, right, right. I want to comment on that indirectly, but to your point, when volatility is low like it is, people who are active traders may tend towards, hey, I'm bearish, I'll sell SPOOs and I'll buy a call because volatility is so cheap. And it is on days like today where you actually lose both ways. The call doesn't go in the money, and the market just stops right below your call, and you are locked in for your max loss. And that is an accurate, I think, handicapping of what the straddle is telling you today. And if I may, I want to pull a page, or let's just call it a corollary to some of the things that Larry does. If you're an active trader and you listen frequently, daily, Larry uses the straddle, as Mike just mentioned, the touchstone for trading. Now, I'm not going to pretend to know what goes on in the man's head because he's playing four-dimensional chess intraday. But when you see a low straddle, the general statement is, if you're trading like Larry does, is okay, the market's not putting much expectation range today. Maybe that'll be his levels of stop out and risk. Maybe that'll be his expectations of, hey, I'm looking to make 5 handles. I'm looking to make 10 handles and lose 5. I'd be happy with that. It kind of helps your expectations. But I want to put a footnote on that and note what happened yesterday. When the straddles are priced low, that means expectations of low volatility. There's a difference between volatility and trend. When a market moves in one direction all day long, that is not volatility, that is trend. And if you're buying a straddle at such a low volatility, you must not be a trader like me who hedges gamma at break even, because your break even is going to make you lose money intraday. Point being is, if straddles are low today, yes, it's a low volatility day. Doesn't mean we can't rally 17 handles. Doesn't mean we can't drop 17 handles. It does imply that it ain't going to happen fast. So be careful of noise versus trend on low volatility days. That's my comment. That's my 2 cents.
Yeah, that's a good comment. That's good info. Just looking back at the markets here, Nasdaq's up 13, S&P's down 2, and the euro is bouncing around relatively flat now from when the ECB started speaking. It's down about 45 pips on the day. Looking at some of the individual names.
You want to touch on those?
What was that?
Individual stocks have earnings today. Might be
Yeah,
worth
sure.
watching. Just going to throw a list out to you. Starbucks has earnings today. I'm sure that's a big mover. but it has earnings. It's one of those recession-resistant type of stocks. Intel has earnings today, and although it's not anymore, it will be interesting to see how they behave given IBM's surprise to the upside. And airlines start to have earnings today, and the reason I'm interested in airlines is because they are tied to oil. Their oil hedges have a big deal with their make a big impact on their earnings. And I look at a company like Southwest Airlines, which if you're an oil person and you're a stock person, Southwest Airlines is one of those companies that hedges its jet fuel out for years, and they were oil rallied. My question is, how will their earnings be impacted by lower oil prices, considering they've locked in their price through, I think, 2019? So those are stocks on the board with earnings today. Maybe Tom McAtee and I will talk about the opportunities to play those type of things. I think particularly compelling.
Actually, having a little bit of audio issue. I don't know. Are you in a different area or somewhere moving around? Or
I am not. I think this is a two-way issue. You have that.
Yeah, you're breaking up a little bit. I'm going to give it 1 minute. But we have at 2 o'clock, Vince was saying our schedule for the day. We have Tom and Vince will be talking options, another one of their great seminars. That'll be at 2 o'clock. 12 o'clock today, we have Angie Setzer talking ags. We haven't spoken to her in a few weeks. Get an update on what the ag market is looking at, how they're going to digest Wilbur Ross's comments, and what else is moving the markets in ag land. Her thoughts there. Typically, we have Bryn Kelly on at 11 o'clock, but she's been traveling and been doing a lot of different things. So she is not going to be with us today. She might be with us tomorrow. Larry will be on a little later. That's kind of the schedule for the day. I think that with ECB, with these Wilbur Ross comments, there's going to be a lot to digest for the day. It's going to be interesting to see if we start to trade lower, how the market reacts, being that the past few days we have traded lower, but we have bounced back. So that'll be interesting to see how that support holds. Right now, the dollar is stronger across the board. I'm actually looking at Bitcoin is right now, the futures at 35.25. The volatility on that has really gotten squashed.
Yeah, I know they're talking about 0.7% moves. I have levels that I talked about gold fix, but without rehashing those people, because gold fix, they included tradable levels in Apple, Bitcoin, Wells Fargo, as well as natural gas. But something that just popped on my radar now, the S&P or the ES, depending on what you're trading, after the first hour, I would look to be long, potentially above 26.44, and short below 26.27. Those two prices, if you're an active trader, they also serve as trading ranges. You might want to sell it right below 26.44. You might want to buy it right above 26.27. But for me, after the first hour, if I see a break above or below those numbers, I'm probably going to go with the flow for at least 2 hours on a trade. That's that's on my radar. In addition to gold, coincidentally, which I think will break down if we get below 1276.
What was the level that held a few days ago? Did we get below 1275 a few days ago?
I don't know if we printed it, but let me see. No, we did not. We did not. Right. But I had a nice trade a couple days ago.
Do you think?
Thank God I was disciplined, because it just reversed hard after I covered.
Right. Yeah, I remember that day. As a matter of fact, you did have a nice trade, and then it reversed back above like 1285. How tied to the dollar do you think gold is these days? So, like for instance, if the euro were to break down below 113, do you think that would be the catalyst to take gold lower?
I think starting from the point of view that gold is 100% inverted to the U.S. dollar, right? Not the DX, as you note, the dollar itself, and working backwards. I think gold is acting a little bit strong relative to the dollar. Okay, meaning if the dollar drops, gold is firm. If the dollar rallies, gold is not getting hammered so much. Now you look at gold today and you say it's down $7, and I can't disagree with you from the COMEX 1 o'clock settlement. But I look at gold, and that is the price that hits your statement if you're trading that product. But I look at the settlement at 5 o'clock on Globex, and to that settlement, gold's only down $2. So my point being this: to answer your question directly, there are some outliers. For example, if for some reason the market, the U.S. market, start to say protracted shutdown is really bearish for the dollar, Fitch downgrade risk, what have you, you could see the dollar sell off and gold rally. But to your point about Europe, uh, uh, a euro sell off and a dollar rally that drags gold higher would mean, in my opinion, based on history and based on I think might be common sense, would also mean the British pound is lower. So what would drive the euro lower, the dollar higher, and gold higher would be a 2016 event like Brexit, which caught people flat-footed. I don't see gold rallying with the dollar unless there is an escalation of military issues in Venezuela, which I don't see on the radar for some time. I do see gold rallying possibly if the dollar gaps lower because of some renewed realization that a government shutdown is not good for our currency. But we still are the tallest pygmy in the world's currencies. So unfortunately, there's nothing really fun to add about gold. It's more fun for me to talk about to trade possibly oil today or the ES. I mean, or the British pound. Who the heck knows?
Yeah, and then
But
also I believe we're getting the DOE data for crude today because of the government holiday. We'll be getting that, so that's another reason to have a catalyst there. I filled up
right,
today.
and
It's
those people.
filling up at the tank. It was at least 20 cents off the low. That said, RBOB is not 20 cents off the low. It's one of those where it's the gas pumps, when the market goes up, it takes it up higher. Then when it goes down, they take it down really slow.
Yeah, exactly. No doubt that is such a truism about how businesses are run. I do want to note, just from my own personal experience, to add a little, I think, good color to your accurate statement. I was in Pennsylvania last week, and the price of gasoline in Pennsylvania is almost always lower than the price of gasoline in Connecticut. And last time down there, which was about a week ago, it was the same. And I thought that was kind of weird. But I think, and that could be regionally related. We'll talk to someone on the fundamental side. But to your point, as heating oil season winds up, the price of gasoline, the gas crack, can firm up because refineries can only make one thing at a time. And so as gas prices drop or as gas supplies drop, gasoline prices could ramp up. And I think that's also a real risk if Venezuelan crude becomes sanctioned because we use so much of it for our own refineries. So that's a practical application, I think.
I owe an apology to the local gas stations in Florida. RBOB did trade down to 125 and back up to about 146. So it was about a 20-cent rise. We are trading about 140 right now, so it isn't in exact correlation with it, but it did have about a 20% pop. So they are in lockstep. So that's not bad. And
what's the price of gas near you?
I paid today, I think, about 228, and it was definitely below 20. It was about 205 at one point.
I don't know. That's because you're probably so close to the Gulf. Yeah, it's like 260 bid at 70 in Connecticut, and it's 220 bid at 30. 220 bid at 30 in New Jersey. And
yeah, so it's pretty close. It's pretty close to the New Jersey rate there. Yeah. But I'll tell you, it varies. Like, for instance, near our office here, it's a good 30 cents higher.
Right. And for what it's worth, New Jersey has low gas prices relative to the surrounding states because New Jersey is what's called a progressive tax, meaning they have a high income tax, and so they keep their regressive taxes, meaning taxes of consumables, a Democrat state, so to speak, low. So I think it's kind of interesting that Florida, which has a low income tax, still has low gas prices. So
here's a question for you, Vince. Do people in New Jersey still not pump their own gas?
That's That's a fair question.
Do you know the answer?
In New Jersey, it's a law. Yes, I have. I have an answer. The answer is people in New Jersey do not. I think you were trying to say the other thing. People in New Jersey are not permitted to pump their own gas. I'm
Right.
not going to say that's 100% true, but I believe that has to do if you're thinking of safety. They basically are saying, hey, you need someone to pump gas. That's something that
Is that
can
what they're
blah
saying?
blah.
They're saying it's safety? I thought it was for jobs, as a matter of fact.
Well, okay. Well, I'm not saying that there's okay. That's what they're saying. The reality of it is you create more jobs that way, and that is the Democratic side. And I'm glad you bring that up because I had to laugh at myself at what I saw because I had to throw a little gas in my tank in Pennsylvania, and it was like midnight on a Sunday, and the gas stations in Pennsylvania actually are now permitted to be open 24 hours a day without even the gas station being open. You can use a card. So if you go 5 miles into Pennsylvania, you can buy gas with the gas station closed using a card. And if you go 5 miles into New Jersey, you can't get within 5 feet of the pump without someone attending it. So look at the
So
job
in New Jersey,
property.
question on that. In New Jersey, can you, at midnight, can you fill, is there somebody there to pump your gas?
Well, no, I don't know if there's a curfew for gas stations being closed, but I do know that a person has to be there to do it.
Right. No, but
That
I would
is the law.
assume then that they aren't having people there 24 hours a day.
They don't. They don't.
This is, I
They don't.
remember because I'm from Florida and I've been pumping my own gas my whole life. And I spent some time in New Jersey, actually in New York. And so ventured off into New Jersey with some friends. And I thought it
Yeah.
was the most foreign thing that they were not allowed out of their car to pump their own gas. And then that's even more so if at
Right.
midnight or 1 in the morning, you can't,
No,
what happens if you need some
you can't
gas?
get gas. I mean, that's look, if you're an arbitrageur like I am, you look at New Jersey, you say, what an arbitrage that is. Let's see. They have higher, if you own a gas station in New Jersey, right? And you have a higher cost
And
of
lower gas
filling your product,
prices.
and yet you have lower gas prices. How is it you stay in business? Well, there's an arbitrage there. There's probably a government subsidy, or there's something that enables them to continue doing that. So basically, I want to be long PA gas prices sold. I should be buying gas in Jersey and selling it in PA over the border. That would be the
Gary's
arbitrage.
chiming in the chat saying that some gas stations do have attendants 24/7.
Do they really? Oh, those are those are probably very profitable. I pity the guy. I've actually gotten out of my car in New Jersey, and I'm not sure how important this is for active trading, but I've actually gotten out of my car in New Jersey, and the attendant was just busy, and I just like, dude, I'm filling my own tank. Here's my card. I'm doing it. He's like, oh, okay, okay. The
You're a
law is
rebel.
broken, but the guy's still getting paid. You know what I mean? So there you have it. Yeah, I'm a rebel. I also don't shut off my engine at a gas station. If you're looking at the risk of that, it's nonsense that you have to shut off your. It's actually worse to start your car up after getting gas. But I digress and regress.
Right. I was
I
just about to
am.
say that exact thing. All right, great talk on New Jersey gas situation. Bryn, that's a great comment topic for Bryn. We'll have to ask her about that. She's in the New Jersey area.
And
Uh,
just anyone who thinks that Bryn has given up her New Jersey resident status and moved to Canada, that is not true. She's still American, and we hope she has a safe journey back to the U.S.
yeah.
And
All right,
that's
so we're
basically
gonna
it.
be back. Larry will be on in a little bit. We've got Angie at 12 and Tom and Vince at 2. Talk to everybody in a little bit.